One of the greatest pitfalls I've seen new traders fall into is trying to learn that strategy with 100% win rates. And I'm here to tell you that actually doesn't exist in trading or any business at all. Every trading strategy is going to have wins, losses, break-evens, no matter what kind of concept that is, whether it's animal patterns or ICT concepts or indicators. It's always going to have winning days, losing days, and break even. And in this video, I'm going to share with you how I use a well-defined trading plan to align time frames and look for high probability trade setups. And in this video, we're going to be using British pound, Japanese yen as a point of reference. And so far, as you can see, I have all these write-ups on my screen. And the reason you can see this is because I always want to remind myself the time frames that I'm trying to align with each other. The first time frame I usually like to look at is the 12-month time frame. I want to see, is the 12-month time frame bullish or bearish? In this case, the 12-month is bearish, consistently creating lower highs and lower lows, lower high and a lower low and a lower high, lower low. So all this impulse move we're seeing to the upside is still within this bearish high and bearish low. So anything can still happen and price could continue to the downside to create a lower low. Now, the moment I can see this clear as day on 12 months, I go to 3-month time frame to see what it looks like. On a 3-month time frame, lower high, lower low, a lower high, lower low, break of structure. And if you can see this, this was the last up close candle before dropping to break this structure. So I'm anticipating to see a mitigation of that key level. If price mitigates this key level, I would like to see a daily break of structure or potentially a 4-hour swing low break. Now we'll go to the monthly time frame. A monthly time frame is still within the bearish high, bearish low. You can see how I'm aligning these time frames. 12-month bearish, monthly bearish, 3-month bearish, low resistance liquidity at the overall low, which is this key level. Weekly overall structure is bearish. If we go to the weekly, you can see that weekly, the overall swing highs, swing high, swing low, we're still within the bearish high and low. And if you actually look at this now, if you look at this weekly time frame, you can see that the weekly time frame on the candlestick chart, we have a low, we have a high. But if you look at this on the line chart, you can see there's a low here, a high, and this low actually got broken right here. But let's just leave that for another discussion for another day. We go to the daily time frame. Looking at the daily time frame, like I said previously on the 3-month time frame, after the mitigation of the key level, this key level, I want to see a daily break of structure here. And if we go to daily, you can actually see very clearly we have a low, have a high, break of structure, last up close candle. So this would be a perfect area for me to anticipate a mitigation. So if price comes in here, I'll be looking for a potential rejection or reaction from that key level. And if we look at 4-hour time frame being our intraday time frame, you can actually see very clearly that 4-hour time frame we have a low here, swing low, and a swing high, and it got broken. The swing low got broken. Last move to the upside before breaking structure. So this is the key level I'm watching to attract price to the upside, either this inefficiency here or this one here. The only thing I'm gonna now do is to be patient and wait for price to come in there. And all I want to do is to align these time frames. You can see 12-month bearish, monthly bearish, low resistance liquidity at the overall low, weekly overall structure is still within the bearish high and low. And daily has broken structure as well. 4-hour swing low has been broken. All I want to see is an intraday time frame break, which is the 15-minute time frame. So if price should come into this key level and I see between a 30 minutes or a 15-minute shift in market structure to the downside, that is when I will now align the smaller time frame to the bigger time frame, because the 15 minutes time frame now has aligned with the 4-hour, the daily, the weekly, the monthly, 3 months, 12 months. And that is the holy grail in trading. The moment I see that alignment, I'm looking for potential entries into the marketplace. So if you enjoyed this one today, feel free to give it a thumbs up. You can share with your friends, and I'll see you in the next one.